All right, good evening and welcome to the end of the review for today. The review for today we do a little bit late. We run into some technical issue. We did do the review in the afternoon, but it doesn't have the sound. It messes up our microphone. But anyway, we get it work this time. So all right. Again, welcome to the end of the review for today. Today is September 16, 2024. So it's the Monday. It's the very first trading day of this week, and this week we have a lot of action. We have a huge impact news, which is come out on Wednesday. The Fed meeting at 2 p.m. Central Time, right there. So it's one of the most sequential or high impact news of the year, because keep in mind that September is one of, and October also, because October is just the follow through whatever September month close. So either October gonna be continue the trend set up by September, which is the third quarter, and October is start a new quarter, and the new quarter, which is the last quarter of the year, it can be a trend reversal or it can be a trend continuation. So basically, if we before we jump into the charts, also keep in mind that we are in week 38. 1 year we have 52 week. So you have 52 minus 38 right there will be 14. So we have another 14 left for this calendar year, and then we close out for 2024. And so yeah, this week is so critical, right? Yep. 2 days from now, we're gonna know the next direction the market can head into. So basically, and the week after that, we're gonna have medium to low impact news, which is the GDP data. Will be on September 26, which is for on Thursday, and then 27, which is PCA data, which is another subset of the CPI data, which is related to consumer index, or another word for inflation metric right there. So that we get out of the economic calendar. But now look at the look at the quarter time frame. So we have the year 24 right here, and we have 3 quarters. See that quarter 1, quarter 2, quarter 3 right there. So we are about 2 more weeks from now. We're gonna close out. The first quarter of this year, 2024. So you have a third quarter right here, and then you have the second quarter is thought that it's gonna be reverse, but is flip. The same for this quarter right here. We thought that it's gonna be flip. Well, it's gonna be reverse, but it flipped back. So very interesting to see how this quarter gonna close out for another 2 weeks or so. But if you look on the monthly table, on a monthly time frame, you can see that, you see a level right there, you can see some kind of setup is formed right here, right? So you have what? Test this from below, and then you have break it. I mean, this is supposed to be a down candle, but it's flip. The same for this month, so we have 2 month flip in a way. So with this could be a This could be a real breakout level or it could be a fall breakout. That's the $1,000,000 question right there. And when we may need more data, right now it's not so clear for us right there. For example, on this level, we can see that break, reverse, back right away, which is give us a signal that the second leg up gonna do that. You see that? Break, right, reverse back, that's no reason come back to the level. The only reason to come back level is just to re-break our level. But right here we don't have that setup. You see, we don't have that setup around this level. We have a very funny right here. It's a little bit confusing. In order for this to be a very solid short setup. So for the monthly right here, it will be much better short setup if we see this candle be like this, right? It's be like this. Yeah, it could be like that, and the wick is not there. It should be like that, and then we have test from above. It's a type 1 reversal right there. So break, right? This level, it break, test from above, and then it's gonna reverse. That's what we're looking for. Maybe all the way here, right? Yes. But instead of that, we have this candle, which is not typical for a short setup, right? Let's look at the short setup we have for today. Let's say this candle. You see that? You see the hue break that level right there. It much different than this one. That's which one we want to see like this. So if this candle replay with this kind of up close candle, then we likely gonna have short setup. But it's not there. It's something different right here. So we have to be careful when we try to short them. So that's a little bit careful right there. Try to short them on the on the monthly time frame, and on the quarter right there, we also see the flip, right? So you have this level right there. Or in terms of the quarter, we see is still very bullish. Right, we don't see any real bearish. If this quarter is close above this level, above 50, 55, 88, this level, then we have a short sell for October or the last quarter, because you have it might. No, we misspoke right there. So basically, yeah, we see the short up can be played out right here at that level, not that level, but at this level. We misspoke right there. So basically, you have break and it tests from above. So we should see how the very first 2-3 weeks of October play out. If it come back and test that level, it's gonna break. It's gonna break, and it may hit that level or below that level. So you see the source up right there. It's break, test from above, and then it's gonna reverse. So that is the setup right here. Type 1 right there. You see the break, test from above, and then reverse. So that may be a short setup playing right there. So for the high time for subframe, it can be go either way. Yeah, but we need to wait for more data. So that's where we at with high time frame. for a little bit low time frame on the daily, right here, right here is on the weekly, so daily, weekly. So right here you see the high right here, and you see it's break the high with the gap. If a fair value gap or it's just open gap, it's still trick at the gap right there. So the next thing we want to see is we want us to go and fill the gap. Right, so it's a ICT unicorn setup right here. You have a bullish breaker, and it's using the break, not break, but it's a, I break that level, break the breaker, and this become a bullet breaker. So it kind of revisit, retest the breaker or fill it up, and then boom, make another leg up. So that's it, bullish signal on the daily. Similar on the weekly, we see that level, so it looked like gonna retest that level one more time. So let's see how tomorrow or next week you're gonna hit that level, which is 5708, right? 5708. Let's see where's that right now. 5708 right now is I mean the day, if it today is just right there, but now it's open for the new day. You see it start right there. So maybe another 100 point right there. It will hit. Yeah, right there. Wow, very close. It almost gonna hit that level. Yeah, what's the level here? Let's see what's that level. Okay, so that level gonna be a weekly level first right there. Yep, that's yeah, that's the weekly level right there. Yes, so it may hit tomorrow. Let's see how it handles that tomorrow. But so far the gap for today is not filled. It left an open. So let's see, it's gonna fill this week or just keep rallying. Alright, that's the high time frame. Now let's look at the low time frame right here. So let's move this back way below. Yeah, let's move this out way. Alright, so before we trading, we always draw two range, right? The range for previous day PM and then the London right there. The London is from 2 to 5 and previous day PM or prior day PM come from 1 to 4 o'clock right there. So whenever we see that London above the PM, then look, and the open is in the mid-range right there. So looking for a liquidity sweep one end, and then it's gonna be reversed to sweep the other end. That's exactly what happened today. And you see that at 9:30 it come down, but this guy is go sweep the high, which is the buy sell liquidity of the London range. And as soon as it do that, it start retrace right away. And we did cut this trade. We go in right here. We go in early. The textbook entry is that you put a sell stop right here, because the logic is that it break the level and it tests from above. There's no reason come back for it to come back. The only reason it come back is just to break that level. So that's the logic, and that's the textbook right there. But if we wait, we put the sell stop right there, then you see that our risk is gonna be increase. Like we always put the stop just around the high of the test from above, which is the step 2 in the setup right here. this is going to be a type 1 reversal right there. So you have break, you see the level right there, the key level right there, and then it tests from above. Yes, so if we're going right here, we're going to put a stop, stop loss at the high, which is exactly what we did. So if we go in right here, we're going to reach more than 1 hour. Yeah. 1 hour first is 5 point right there. So that's how much we reach. We reach 1.5 hour, which is around $200.50. In this case, more than 1 hour is about 6.41. And then we aim for 3 hour, right? We aim for 3 hour, which is 15 point. Yeah, right below there. Yeah. So if the textbook right there is still fine, it still hits the target. But for today, we decided to go a little bit early. So we go in as soon as we saw this candle flip, we go in. So we reduce our risk, which is a good thing. Yeah, we reduce our risk to very little. I think we reduce around that. We less than let's see, 5. Yeah, just less than half an hour, right? Yeah, we reduce very little. I think we reduce all the way here. We go all the way there. It's less than half an hour, like half an hour. Half an hour is 2.5. Yeah, around there we reduce our risk significant, and we have a huge run right there. Yeah, we didn't catch them all, just 3 hours we get out. So that's an idea. But remember this setup, whenever we saw this before a couple of times. So when we see that the London range above the PM range and looking for the rate on the buy side, it's gonna go rate in the sell side. Let's look other screenshot we have in the past. Yeah, this is the screenshot we have the prior day, which is last Friday. You see that the pattern right here. That is the previous, prior day PM range, and then you have London, and you see that as soon as it rate this liquidity, it's gonna reverse. And it may not reverse in the PM, then in the accuses in the IM, then looking for a reverse or retracement on the PM. We did take this trade last Friday, and we did get 3 hour right there. I think at first we trade right here. Well, we enter right here, we get stop out, and then we re-entry. So basically we lost 1 hour and we gained 3 hours. So net we have 2 hours for last time. So look at the node right there. It's a perfect setup. You have a liquidity sweep right there, and also we put a note right here. So the double push right there, one it push, or swift, double swift, the buy sell liquidity 1 2, boom, right there. Yeah, we should put the note. One more thing right here is we need to put a note about the London range and pivot there right here. Give us some contact. But in this case, very interesting that it's whip, but it not reverse right away. It's gonna be the PM. But for today, it's with as soon as with the buy side is reversed right away. And one of the reasons because it has a huge liquidity void right here. It needs to retracement. So that's one of the reasons. Yeah, we put right there. That's the right up for today. You see the London rate step line, and you see that the London range is above the PM range. I think let's take the one from Thursday to see anything similar. All right, this is the day before Friday, which is last Thursday. You see the setup? Very similar. The Friday PM right there, and then you have the London is above right there. You see that? Just, you know, above right there. And as soon as it rate the high, which is a buy side it's retracement right there. That's, you know, in this case it happened before 9:30. The setup we have for today is just the same mechanism happened today. So today we have so today the setup is, you see, it also rate the buy side right there. After rate buy side is retracement. See that? That's the London range above the PM previous day high right there. So similar to the Thursday. Well, the Thursday we have so this is the today. Let's look at the Thursday. Yes, Thursday it happened on this right there, and then it flipped after its rate. It flipped because you see this is very strong support around it level, and then you see that it up close. I think we do have yeah, we do have a we put together the 50 minutes time frame and also the daily time frame together, as we have the context. So right here, after I sweep the buy side, then I'm gonna sweep the sell side, and then boom. That is the pattern we have. Similar today, you see that? It sweep the buy side, and then it go down, sweep the sell side, and then boom, it reverse. So that is the pattern that we try to bring to your attention right there. So yeah, we did took the trade right here. We're gonna show the recording we have. And right here we are a little bit set up right here, but we didn't trade. We already took one trade and we get 3R. It's so perfect, so we just want to, you know, leave it the day on a high note, right? We want to finish the day on a high note. I think we do better to manage our greed because it's really cost us a lot. For the past couple of months, when we start out very patient and very very control, you know, very good at controlling our greed. But then things start and go south because we just try to make money. We let our greed really take over. And that's the reason why we blow the account easily and many times, because we try to focus on the outcome, try to make money instead of focus on improve our craft, right? We should be act like we are hunter. So we should spend more of our time is prepare our, you know, our setup, wait for the break come to the targets and pull. We cannot just, you know, spray everywhere and run out bullets. And that's the huge lesson for us. And for last couple of days, we kind of reflex and pull back. And the last three trading day worked perfectly because we just trade one setup, one trade right there. If the setup is forming and we identify, we pull a trigger with a hesitation, and that's it, we step away. We should not go and force ourselves, do lots of, impulsive trade right there. And we feel good. Be patient. Be patient with ourselves. Yeah, we saw a little bit setup right here, and especially at that moment. At this moment, we saw that this become a very huge spot level. And this candle flip. Look at the recording. We see that it flip. So we know immediately it's gonna go here, hit that level. And we did, measure. You see, is it worth it to engage? Right. I think it's about, it's about more than an hour. We did measure and we say, wow, if we engage there, we can get 1 hour. And we have to reach what? We have to reach right there with the low of that candle. That's the low. Yeah, it's still a decent 3 to 1 right there. But we tell ourselves, okay, no, we just stay disciplined, There are lots of money to be made, but we don't need to rush, to focus on our process. We saw that setup, right? We saw it right there. Oh, we have to be right here. That's an idea. So we said, wow, is it worth it to reach an R and gain another R? Right, that's come to our mind whether we pull a trigger. Yeah, that's the dilemma. So we decided, not to. We did take a screenshot of that. I think is where is the? Yeah, here that's the screenshot we take right there at 2. And a little bit after that, 4 or 5. You see, this kind of flip, it go down and it flip. Right. If you look at this candle, you can see the short setup, but it flip. That's the reason why we put 4 breakout turn into the real breakout. Let's look at the level. All right, if we mark at the level, you see that it break, test from above, and it will reverse. It should reverse, but it just flip. That's the moment you know that you go in, you can go long. So what's the low of this is 81.25. 81.25. Yes. You see that level? So what do you see right here? You see break, test from above, and then this supposed to be what? Reverse. Make a second leg down, which is that's the set of right here. Break, test from above, reverse. But remember, keep in mind, depend on the location. If this location is on the top, then it's more reliable than right here. It's not on the top. It's like in the bottom. And that's the reason why you see this candle is really flip, and that gives you a signal that go long. And just aim for this. You can aim above this level. At the high candle, but the low hanging fruit is at mid level, which is the range set by the 930 candle right there. Let's take a look at in the real time when you see the candle at 12:45 flip, pretty quick. Okay, so that's you see that the that is the setup that we saw that, but we didn't engage because that I flipped right here at 12, right there. Yes, so that's at 12:30. It flipped. Just pause right here. You see that level, break test from above. This one's supposed to be reverse and create a second leg down, but it flipped. You see that? It flipped. And we're thinking about engage, so we put in a measure right here, see how much reach we reach. And we think if we go in right here, we're gonna reach about 1 hour and get 1 hour. So we don't want to do that. We have a beautiful trade right here, beautiful execution. So we just want to, finish a day with high no. So we let it go. But it really goes to the level exactly the level we anticipate. That's the low hanging fruit level right there. Another level gonna be the high of this candle, and it did reach there also. You see that? Yes. So that's it. Another opportunity, but we just let it go. We don't want to take it. We have a beautiful trade here. Let's look at the beautiful trade we make. All right, here's the beautiful trade to make. Take a look. You see the setup right here, this level, the high of the 930. You see the break, test from above, and then it gonna reverse. So like we mentioned earlier, a textbook entry, you're gonna put the sell right here, sell stop right here. Because the logic is that it will never test this level. It will never test a retesting level again. The only time it tap the level again is to break reverse them. But we decided to go in early right here. We go right here. Because we going early, we risk less. So we learn our lesson. Why not? Why not read less? Wait right here, right? Wait right here, you read 6 points, which is more than 1 hour. But if you going right here, we read less than half an hour. So let's see. So all right, so this is candle of 10-15 right there. So 1 minute, first 1 minute, we let it play out, and then 1 minute passed. Then we decided to engage. Look, we're gonna engage. We jump in and shout. Yes. So we jump in shout at after almost not even finish the second minute. Yes, we go in, we jump right there, and we get very good reach reward right there. You only reach 87 cents. It gives us $87. So we go in at the 36, 38. So about 2 points right there. So we reached less than half an hour. Right? Half an hour is 2.5 points. And we gain what? We gain, 3R, right? That's our units. But in this case, if you go risk reward ratio, we get 1 to 7 right there. That's the beautiful of going early. See that? And boom. So the candle we go in is the candle hit our targets. You couldn't ask for better trade setup and better, execution than this. That's a beautiful trade. You only risk $37 and you get 750. So it's 1 to 7 right there. That's the beautiful setup. If we let it run, it can run to this low of this candle at 9:30. One funny thing we want to point out this morning, that's something between the trading view. You see it messed up the price right here, because for the thinker or swing, the level right here about 400, not 400, 40 point different. It should be 56, 40 something. You see, right here it's only 40 something, right? Look at right here, something wrong. You see at the candle right here, you have 56, 83 something. This is the the 930. But for the Thinkorswim is 20 something. So it's about 60 point different. I don't know, there's some data fit going on, mess up the Thinkorswim. We noticed that, but it does not make difference for us because we go with the relative level based on the candle range. So it's not based on specific, not on exactly price level. So that's one of the good thing right there. But the funny thing that's so you see that's some mess up with the Thinkorswim. With the TradingView, you see TradingView at the end it's jump real high. It matched with the level. So right now the level is sync is matched with the Thinkorswim. But this morning it's about 60 point different. Now it matched. You see that? It matched around 56.94 right there. So 56.94 right there. You see that? 56.94 right there. But this morning it's way out of whack. It's 26 there. So something wrong with the TradingView data feed this morning. The data feed got messed up. All right, we concluding here. Thank you for your time and interest. Always grateful for your time, and we do what we love, and success is coming our way. Day by day, in every way, we're getting better. Have a great evening, and see you tomorrow.